Hey traders, what's going on? Jamie Saettele here. SB Midweek Strat webinar getting started right now. Horace, what's going on? Horace says hello. So I'm assuming, since Horace just said hello, that you guys can hear me and see me. Or not me, but the charts. Vladimir, what's up? S&P, Nat Gas, you got it, my friend. We will certainly look at both. Lost audio, says Pooja. Testing again, testing again, testing again. Okay, we're good. All right. Before I go into my market comments, I've gotten a few questions on signal stuff, or the alerts, right? So again, and if you guys want to, check out the presentation for those alerts, I should probably put the link on the the swing update as a permanent link. But if you scroll back, if you go to the swing update archive and you scroll back to, it's here, the March 30th introduction to automated alerts. And you click on here for a PDF, and there's the presentation. But again, this is not like, these are totally separate things. At least the euro dip and rip is totally separate from my own trades, right? This would be something that you would trade separately or differently if you want to use it as a very short-term signal if it aligns with what you're seeing or whatever. All right. So you can see you get a bunch in a row, right? The initial one is the trigger. So it would have taken a short here at 6 a.m., 108.92. It got out for the 3-hour time limit at 9, but then it went short again because it was still giving a short signal, and it would still be short as of right now. Now, yes, I'm long personally, right? But that's based on something totally different. It's based on a much broader time frame, right? And then we have the 4-hour alerts. And I currently have the 4-hour alerts on for euro. Okay, you can see euro 4-hour alert. It actually would have triggered a long before the weekend. I'll get to that in a little bit, but it would trigger another long if RSI dropped down probably below 47 on the 4-hour chart. Okay. The 4-hour alerts it turned on in pound have been long. Those are off now. I have a feeling it's in a flat, right? So just a quick update there. All right. So with the dollar, this is DXY. Okay. Huge break here. Really important deal. We are bouncing, and we are bouncing from the 75 line of this fork, which again, I'm drawing it off of the 1220 high rather than the 1.3 high, which was this quick spike. So to me, this is I guess you call it the orthodox high. And let's see, 103.60, yeah, 2 ticks above the high from 1228. The median line, interestingly, actually intersects tomorrow with the old trend line. So, if the dollar is once and for freaking all going to turn over, then I'm going to tell you that this is probably the spot for resistance, 99.50s. All right, it probably means euro goes a little bit lower. We'll look at euro here in a bit, but that would be my focus on DXY. For US dollar, similar. Again, should probably draw it from here. Does look better there. holding these. The short-term fork on this is not, I don't have it, it's not as clean as far as the turns. Like you don't really have any really good, you know, any good action, say on, as far as 75 line, 25 line, median line, stuff like that on the US dollar. But the big thing that, we were paying attention to that kind of already happened, right? That was to turn off the really long-term parallel, the red parallel, which, oops, why is that going there? Like if I go to a daily chart, that to me is the dividing line. So, my focus, generally speaking, dollar is still lower. This is a downtrend. It doesn't really feel like one, I guess, because it's extremely choppy. Every time you trade to a new low, for example, break the lows here, March, rip. Break the lows just now, right? Rip. So certainly this is how beginning of trend, the early stages of a trend do start. If this is indeed a downtrend, it's not going to let you make it easy to stay on board. Right? It's going to make it very difficult. So that said, all of the dollar charts are not, or dollar pairs obviously are doing very, very, very different things. Like it's been a bull market in the dollar all week and everything except for really the euro, and that's just because of the gap. Pound hasn't really done much. Dollar yen obviously soared. Aussie and Kiwi getting smoked, CAD smoked. EM currencies are ripping, or dollars ripping against EM currencies. So we are seeing it's not a dollar story necessarily at this point. It's more Europe verse. And let's go into the specific currencies. All right. So first things first. How about the yield spread? This is the point of this, and I'm as big an advocate as just if you're going to trade euro dollar, trade euro dollar. But you can't dismiss how big of a behavior change this is. So, there's some people that will follow the yield spread like religiously, and they literally just try to trade euro dollar off the yield spread itself. I don't advocate doing that. What I'm saying here is that each time, so since this was the election, okay, U.S. yields soaring against German yields. The top in December, interesting, and since then pattern has gone in lower highs and lower lows, but each time we've come down into the March 2015 high in the spread, we've rebounded, which has been obviously a headwind for any euro dollar upside. So the fact that we broke this, obviously on Monday with the gap, to me was a big change in behavior for the spread. So that, is important. Not looking at, the spread all the time, but just being aware of when behavior changes. So if this is indeed a big behavior change in the yield spread, which I think it is, then it increases the probability or the likelihood that euro would also see a big behavior change, which it has, right? Going up through 109. We're not holding above it right now, but see how we finish the week, I guess. So that's how I'm looking at this, or why I'm looking at this. Okay, moving to euro dollar. So let's go to the daily. I think that there's really no difference or no change really in the analysis, I guess, from early in the week. Currently long, right? Was looking for kind of a pullback and retest and continuation into 110, but I still see the 110 figure as being a big area, not because it's 110 and the psychological component, although I guess one could argue that that might have something to do with it for other people, not for me necessarily, but trend line is 110. The upper channel, which you can see we're drawing this from the low back here on the 20th of December, just like DXY, not here. And that's proven to be the correct way to look at it, because this is where the support came in back in April, right? If you were drawing it like this, you'd have it pretty much broken down here for a number of days. And the Friday low down here, right? So here's the thing. If we didn't have all this, herky-jerky news stuff to worry about, it would be nice, because you would just be playing the levels, right? But going into the weekend, even if you had a bullish, like the things played out perfectly. This was support. We even had resistance up at the fib, right, at 107.77, pulled back into support, which was the place to get bullish. But I'm not a freaking complete moron, and I'm going to tell you that you should be buying euro right in front of the French election, because the alternative outcome is that you open down here. That's pure gambling. But the technical levels are playing out, so I'm hoping that we actually have something to work with for a lengthy period of time, and we go into a smoother, kind of market that respects its technical levels and parallels and everything else, and get out of this mess that we've really been in for 2 years, ever since back here. Okay. So what to watch for in euro right now? If we trade out of 110, out of this channel, you'd be trading out of the corrective channel, you would then be calling this an impulse, right? In which case things would be exciting on the upside, with a test still up around 111, just above 111, which is your long-term median line, right? That's the median line that's been resistance ever since the low in March of 2015. Right, it was resistance on that spike. The Chinese yuan deval, market crash, what have you. Save for last year in the very beginning of May, right? It was resistance. That was a false breakout, but it was resistance after that, including on the election. So that's a big level to pay attention to if we get up to it. ECB tomorrow. And today we're actually making a reversal today, which is kind of disconcerting, I guess, from a bullish perspective. So we'll see how things go here the rest of the day, but not so sure that I'll be sticking, with an uber bullish, very, very short-term view heading into ECB. If we get down into ECB, down into, say, like 108, which is the median line, that might be your, real next special place to buy euro. Let's go 60-minute. We actually just hit a level, your support level, okay, for euro. This was our old fork that we were looking at. Remember when I did the video last week, and I talked about with the daily close or the hourly closes, the 4-hour closes, we talked about this being A, B, C, and that there is indeed a possibility of a bullish outcome for euro dollar. I guess the French election kind of helped that out, but you can see that the top upper parallel of the former fork just provided support. Okay, so I'd be looking higher, literally right here. It might be worth, if we can finish the day, on a positive note up here, it'd probably be worth tightening your stop under here. Because if this goes, I'm thinking that you probably, with ECB tomorrow, the next level that you're going to get down into is probably going to be, again, this median line, right? And maybe even the lower parallel here, but the median line at 108 would be the level that I'd be paying very close attention to, or much more interested in. Noted that you do have a high volume hour from yesterday, and that's 109.28. So that's going to be viewed as a minor, very minor resistance level. If I look at here's the volume chart, you can see we just got a CAD volume level actually. CAD's going is just kind of all over the place, is it not? Yeah, we just got a CAD volume level. Here's the euro hourly chart. This is futures, so price might look a little different, but you can see the volume yesterday on that hour. Yesterday at the European fix. Most volume we've had since, in 1 hour, since March, since FOMC in March, which was right here. Okay. So it's an important zone. And if you get up to it, a big volume level like that, a lot of times you do get a reaction. So I'd be aware of 109.28. But we just hit good support. Probably, would have been, I guess, a better entry for 108.50s rather than 97 on the long. But I didn't, definitely was a case of FOMO. I didn't want the market to come in and lose the entry on that. But this is good support right here. All right. So that's euro. Next couple days, just thinking 110, 108, outside chance at 111. Much below 108, I'd start to kind of, say screw you, euro, and move on. What about, is there a tell as far as, dollar SEK, dollar Swiss and dollar SEK? Obviously, when you get divergences with those, with euro, which I, noted 2 days ago in the post, right? The 60-day low in euro not being confirmed, or 60-day high in euro not being confirmed by the 60-day or by a 60-day low in dollar SEK and dollar Swiss. Let's forget about dollar Swiss for a little bit, because dollar Swiss is really just being manipulated by the SMB. I mean, you saw what happened with the ECB, or sorry, with the weekend French election. Dollar Swiss hasn't done jack all week. Okay. So what we want to see is this, this divergence come out, if you will, right? Where we get we want a 60-day break here, 60-day low, 3-month low in dollar SEK to confirm the new high in euro, and then we can be on our merry way off to the races. Okay. Again, that level comes out, or that divergence comes out, if we can close. Now it's actually up to 874.73, which is, look at that. It's actually the low today. So we're really close to getting rid of that divergence. Dollar SEK itself, 5 down, 3 up. This looks like this looks very bearish to me on dollar SEK, right? Sharp decline, 3-wave advance. The 3-wave advance is not quite equal, but look at the sharp turn lower. Okay, and then don't forget, this is actually a chart that I posted. This was on the last day of 2016. We counted 5 waves up into the December high, and since then, dollar SEK obviously has turned down in this manner. To me, this looks like a very bearish chart. So, maybe you should just be short dollar SEK, but I'm not a big fan of holding Scandi trades overnight. Also, big time spread transactions on that, or the cost of trading it. But I like dollar SEK lower. To me, this would confirm, a bullish view on euro. And they say as kind of dollar SEK goes, kind of as a leader for dollar in general. So we did top. It was the first to top. It did top. Remember, early December. Whereas euro made its low in January. So if we can get this third wave, or even a C wave going into dollar SEK on the downside, then would think that euro, kind of gets the drift and follows along. Okay, cable, really no change here as far as cable's concerned. I still have, the potential for a flat from up here on the breakout day. I know this is a real tight consolidation and it could just go straight higher from here. However, experience and any, if you've ever traded, cable for any extended amount of time, you do know that you get a lot of false breaks, right? So we had that move higher just now, right before the European fix. I don't think there's any really rhyme or reason for it, but we're going to get potentially a 4-hour divergence on that as well. Let's go to the cable momentum chart. So you can see here, if we close a 4-hour bar above 28.43, RSI is currently well below 65, so we're going to get a divergence signal. Here's the divergence signal. It's got one at the low, got one actually is before a high, so it really wouldn't have worked out too well. Got one up here on a high, up here into a high. So yeah, if we get an A, B, and then a C, and it still gives us the ideal spot to buy pound down that 27.0520 area. Look, I think pound's headed to 135 plus. Okay. But it is a matter of getting the right entry and getting the price. So, you got a confluence of slope here and horizontal levels coming into tomorrow at 27.05, 27.20. So it's a good area. Also, if I bring up a chart of euro pound, thought this interesting. Euro pound looks like I had put together this chart, and now I don't know where it is. Okay, here's the euro pound chart. Euro pound chart, here's the uptrend. And you do get a new downtrend line and an uptrend kind of confluence coming up a little higher. So if you can, get a bounce up here, kind of be a, some pound weakness relative to euro. But, if you get, I would, think that maybe pound trades off a little bit if you get a euro pound move up towards this region, right? Up to this trendline confluence, in which case the flat interpretation for pound dollar certainly fits. All right, dollar yen. We were on this one this week and never pulled the trigger. At least I did not down here. This was a perfect example, just a beautiful example of, and this is go to the 4-hour chart, but a beautiful example of, of corrective channel coming back into play. So we did come into it, right? We had 109.60, 109.70 as support, made that 4-hour reversal Monday night, so Tuesday Asia, and it's been literally straight up ever since. So kind of dropped the ball there as far as execution's concerned. But what now? Well, we've actually done a round trip now for the month. So we are, dollar yen's actually positive on the month after being, down here below close to 108 on the 17th round trip. I would think that we're probably close to an interim high. All right. Dollar yen hasn't come off that much. The Nikkei is obviously was up a bit more earlier. It's up 80 points now. Two levels for dollar yen to find some, some resistance. Probably about 112. 112, you actually do have a confluence of slope levels there. You do have a square root level at 111.84, but this is, this is a long-term slope level. Okay, something we've been following for pretty much the entire year, and I still like the idea of buying dips on it. So, 110.56 is the median line. It's also the weekly open. So those are the two levels that I'd be interested in. 112, 110.56. Not necessarily saying to sell 112 because you do have the high just at 112.20, and this is, markets these days tend to go straight through levels and pick off stops. So if we go through 112.20 and turn around, maybe it's worth a shot to take a short into 110.56, 110.60. But those are really the two spots I would pay the most attention to. Okay, 112, 112.20, 110.56. With this, we want to look at the Nikkei as well, and in the Nikkei, last night's post we had updated actually suggested a fourth wave back here. It was the low, and the Nikkei's up 18,260 to 19,305. I mean, it's up 1,500 points. It's a wild move. So, the reason, again, last night I said I wanted to buy dips because I think this is a fourth wave drop and we're going to new highs. So that means, 1, 2, 3, 4, 5, 1, A, B, C, 2, 1, 2. Can't really count the election down there for a little bit. 1, 2, 3, 4, 5, 3, A, B, C, 4. And we're going higher in wave 5. However, would be looking for a pause or a pullback, especially now that the Nikkei took out the horizontal high, right? So this would be like if dollar yen took out 112.20 and pulled back, and you are starting to see the Nikkei now, 4-hour bar, you are starting to see the Nikkei maybe churn a bit up here. So I do think that you get a decent pullback in the Nikkei before it can go higher. I don't want to give a level on where support is right now for this. It could be down near 19,000 just because look at all the levels that you have down at 19,000, right? Here, okay, pretty close to here. It's 18,990, but let's call it 19,000, right? Lows in, February and December when you're pulling back from highs. It's kind of where you found support. So that would be a 300-point drop from here, at which point I'd be, lower and then higher again. Certainly would jive with a pullback in dollar yen from, if not right here, then from 112, 112.20, and then lower and then higher. And we got BOJ tonight. I don't know what I don't think it's supposed to be a really big one. But again, when everyone says that nothing's, you're not supposed to have a really big event, it's when it tends to surprise. So I don't think that the BOJ is going to come out and do anything crazy because, just think of the political situations going on right now. It's not necessarily, one where they want to test Trump with all his rhetoric talking about the dollar and this and that being too high and people, if you read the Treasury report 2 Fridays ago, they didn't name anybody a currency manipulator, right? But they had some pretty strong language in it. And they were talking about, basically they were warning countries not to devalue their currencies. And if the BOJ came out and did something wild and devalued yen, sending dollar yen higher on purpose, you can bet that there would be retaliation. So I think it's probably more likely that this comes into exhaustion for Nikkei and dollar yen. You get a bounce or a dip, and then you look higher. So there's my story with the Nikkei and dollar yen. Okay, what about gold? first touch. Thinking is that we have probably, 4 to 5 weeks of sideways to down in gold before it is allowed to go a lot higher. Just a, consolidation, okay? And, where might that support be? We're kind of around it now, right? This is the high from 227, February 27th, levels over here as well. Okay, this is 1261. You can see that you're on it now. Dip. I think that you probably are going to get, again, some sideways movement. So you get a bounce here, but I would be looking at this trend line, which is obviously not really confirmed here. But it is a channel. It's not confirmed really because it's really 2 points, but it is a nice channel, okay? And in that the parallels do, match. But that level is going to give you basically the 1240s, low 1240s, which good horizontal level 1240s, right? 10 October low before a big rally. It was resistance back in early February, and it was support here before the latest run higher. Okay, so 1240 or so is going to be a good spot to watch for gold. And you can bet that if we get down there, you can bet that you're going to see all kinds of calls that this entire thing has failed. In other words, the breakout has failed and that gold is screwed. Whereas in reality, it will probably just be the time to end up buying support. All right. So currently on week 2 of a consolidation, give it at least 1 to 2 more, maybe 3. But 1240 is an area that I would look for to hold for support in gold. And that brings me to the Aussie dollar gold relationship, which a lot of people will look at Aussie and say that gold in Aussie, really, it's not that Aussie trades with gold. Aussie trades more with copper. However, there have historically been periods in which you actually see a lagging relationship in Aussie. So if I take what I've done is copy the price action from the June 2013 crash low in gold. Okay, I copied it. I moved it over to the Aussie chart and lined it up with the August low. So what you have is basically gold running at times 1, 2, 3, 4. Let's see, 1, 2, 3, 4, 5, 6 weeks ahead of Aussie. And you can see what happens when we did that, right? This is the gold chart, called the Aussie top, called the Aussie low, called the Aussie breakdown. It didn't do any, it was out of commission for a while. It came back into play in the summer of June 2015, right? June 2015, June, July, August, and into December and January of then 2016. And it was spot on for, months. Okay. And then it went out of favor, really, as we got into a year ago, last May. And then it didn't work anymore, right? Because I remember talking about it at the time, and I was like, well, it's still working, so maybe we get at the Aussie low. In May, we didn't. It happened at the end of May. It hasn't really been in favor for a while. It might be about to come back in favor. And here's the, if it does, we'd basically be looking for a low, probably this week in Aussie. And I know Aussie's breaking down right here, but let's look at the Aussie chart. So really, this is the first time we've actually touched this parallel. Just below it right here. But this is just the trend line from 2016. Let's draw that correctly. Hold on here. Off this low here. And copy that, move it over here. All right, so there's support, support, and now we're trading right under it. Okay, we've gotten to 74.54 today, which is 50% of the rally from the December low. Interesting. I'm not gonna. We're on the lows. We've broken down. So can you go lower? Of course. And the next level would be basically the 73.85 area, which is the 618 level. Probably a better area being the 618. 618, and then the highs from October, December 2015. Here's my indicators page. You see all the magenta dots, right? We'll get rid of the reversal bars for now. We're getting a lot of divergence down here with RSI. Okay. So RSI continues to show or flash divergence, just as it did at the tops, going back a year. You had some blow-offs, right, here. It's been really good, though, as far as identifying some highs and some lows. Even the last divergent lows we actually had were back in April of 2015, early April, but back here. So we're getting it again, and we have the gold analog. So I have no trade plan for Aussie right here. I'm not saying that it's a good long right here, right? Because you could still go to 73.85, which is in what 75-80 pips. But I'm aware of the gold analog. I'm aware that copper has come into support. Right? I mean, perfect support. It's a level we were waiting on for a long, long time. Finally came into it. It's holding up. Nothing to write home about just yet, but it is holding up. And Aussie is breaking down. So you have to ask yourself, with copper holding support, with this, the gold analog, which is not really confirmed again, but it's a possibility. And then all the divergence and the great levels that we're seeing, we've now entered the fib zone, right, or the retracement zone, the 618 to 50% of the run up from December. You have to ask yourself, is this more likely to continue lower, or is it, is there a possibility of a false breakdown here and therefore a trap for bears? I think there's a good possibility of a trap for bears. And how funny is it? Like, we've talked about this forever with the copper huge level that we've come into, and we were talking about it back here. And we were like, well, if copper comes in that level, and some of the people, some of the members were saying, well, if copper drops that far, Aussie's going to be way down here. Well, they've actually gone opposite recently, right? Copper's been rallying since it hit its support level, and Aussie's been going lower. So everything is it's like bizarro world out there. But again, over time, all these things will come back into line. So that's all I'm getting at is that you've entered a big zone for the Aussie, and I want you to be aware of that. Okay, if we go short term on a short term chart, so here's a 4-hour chart. The trend line that's actually been working is this one. Okay. So if we bounce from right here, you'd essentially be looking at the former lows, about 74.90 as as a spot to watch for resistance, and a possible short position to take it down to 73.85. Okay. that was a high volume level. It's not anymore because we just had one. So here's the former low. All right. So here's the low, 74.91, 74.91. If you do get a bounce right here, Vladimir saying, where might we bounce from here? Like literally, like right now, like right here, like right now. Like it bounces from here or it doesn't bounce. Okay, and I'd be looking, if it did bounce from here, 74.91 would probably be your resistance, at which point you could then look to take it down to the 73.66, 73.85 zone. And that would be the area where you might want to watch for a low. All right. So support is literally right now. Resistance is 74.91. Support is probably down here near the 73.85 area. I have not drawn this fork. I want to see if it's anything interesting. Not really. Well, that one is. That's actually the same slope as this. What do you know? Isn't that cool? So this is also that median line, Vladimir. So yeah, this would be where you'd expect to see a bounce if you're going to get one. Well, that's just fun. So that's Aussies. That all makes sense. Like I'm, want to be aware of. Matthew's saying, if you consider a head and shoulders confirmation, head and shoulders confirmation. Head and shoulders confirmation. Where would the head and shoulders be on this? Neckline from early March. I'm not sure where the head and shoulders would necessarily be on this. But everything that I just went through is kind of what I'm looking at, right? So 74.91, March 9th. To 11th. So here's March 9th. This is the low. Yeah, I'm not sure where there's a proposed head and shoulders on here. Either way, let's just call it that we have the levels that are interesting to trade. 74.90 or 74 now, 55, 91 resistance, 85 support. All right. Okay, what about Kiwi? Kiwi is getting hosed. We're short last week, albeit with a pretty tight target. And then we got the gap open and Kiwi's fallen to hell the last 3 days. I thought yesterday, after when I was looking at things, I thought we'd get a triangle A, B, C, D, get a little bounce E, and then get the dump. Instead, we just got the dump. Kiwi, I'm not going to spend a whole lot of time on Kiwi dollar here because I think for me, it's a waste of time right now. But two levels to look towards. I mean, this is a breakdown, so I'd be looking for continuation to extend towards 67.90 trend line from 2015, 2016, and ultimately potentially 67, near 67, which is the really long-term median line. And if I scroll way back, right, median line, this goes back to the 2011 highs. So that would be your next spot to look for. Okay. I think Aussie Kiwi could be a very interesting trade. coming up soon. So the long-term analysis, right? We got weekly chart channel, touch on the median line, pull back to the 25 line. On the gap, Aussie Kiwi higher. Short-term chart, here's the daily. Pullback, we get the big rally. It does look like we're getting if I look at a 4-hour chart, 240 minute, let's try it again. It does look like we're getting an impulse higher. 1, 2, 3, maybe a little 4, maybe a little 5. Pullback at some point in the next couple of days, if not a little longer. Really good support, probably around 107.60, right? And this sets up again for the big, the big move. So you've had your initial breakout in Aussie Kiwi. You tagged that long-term median line, pulled back to the 25, seeing impulsive action on the upside. The next dip into a really, really good looking level of 107.60, probably going to be your support. At least that's what I would think. You do have the month open just above here at 108.80 as a potential, pausing point resistance. So Aussie Kiwi could be really interesting on the upside. Maybe Kiwi is really, really bearish. I don't know. It's like I have a tough time getting uber bearish Kiwi against the dollar just because of the and have been wanting to short it. We were short, got stopped out break even, but have been wanting to be on the short side, not necessarily the long side on Kiwi. But the COT it's really extreme, and it's going to get more extreme now that you got this break. So that's the deal with that. So Aussie Kiwi, I very much like that idea. Pulling back to 107.60, I think it's a buy. The two of the most interesting crosses right now, non-dollar wise, are Euro Yen and Pound Yen, especially Euro Yen. Okay. So this was the chart from Sunday, and that median line, we pulled back into it, and then it was straight up. Another reason it should have gone long dollar yen. Resistance, trend line off the tops, in line with the high up here on March 17th, and that's 122.25, right? I thought we'd probably try to stop around 120, 115 yesterday, which is Italian referendum stuff, and did cut through some pretty good pivots, right, on the way higher into the year open on the 13th of March. If we have a late day sell off for whatever reason, then fine. Start maybe look a little bit lower. But at this point, 122.25 would be the next area of interest. You are going to see a pullback in this, I would think, at some point. And this would be something actually where I would look to turn on maybe the 4-hour alert. And I'll show you what that chart looks like in a second. This is the top side line that you probably want to pay attention to over the next number of days or even longer, right? If we can pull back into this weekly open 1990, would be nice to pull back into that by Friday. That would be a buy. But for now, I would just focus on 122.25 as being a barrier, followed by any pullback would be watching the line here for support. And it's very much like dollar yen, right? Like I have dollar yen. I think it's going to pull back soon, like the Nikkei. and gold's probably going to bounce a little bit from here. But I don't want to be short dollar yen here because it could still go a little bit higher, I think, before it pulls back. Same with euro yen. Pound yen. Remember all this disastrous price action wedge-like? It's all been taken out. All of it. We're actually at the next parallel, or close to it, on the long-term parallel. 140, it's just below the yearly opening price, which is 143.99. Don't have nearly as interesting a short-term structure for pound yen as we do with euro yen at this point. It will evolve at some point, but there's good horizontal levels to look at. So all that resistance that we had back in March, it was all March, wasn't it? It's pretty much all of March where you were stopping on the upside every time at 140.75. $140.75 to roughly 140.40. That might end up becoming good, good support on a pullback. But here's what I'm talking about with the system. So you go into this extreme kind of overbought thing. It's like, how do you get in the trend? And this is exactly what this is meant for. So here's the dollar yen one. Another reason why I think we have a dollar yen pullback coming is we haven't had a buy yet on the system. So like back after the election, when we had that crazy move higher, the pullbacks gave us the buys, right? And they were shallow, but they were good enough to trigger the system. And it was straight up. Okay. Dollar yen was shorting on the way down and just changed position here at 109.46. And now that you've got this big move higher underway, eventually you're going to get a pullback. I mean, we're currently at the RSI on this move is actually just about what it was at the extreme after the election on the 4 hours. So I mean, we're getting to the uncle point here for short-term moves, and we're going to get a pullback. Question is, where does it end? I think 110.56 is a spot for it to end. Maybe 110.20, but whatever. This is why I'm going to have this turned on, the alert for dollar yen turned on. Okay, I have it turned on now, but I'm going to have it turned on. So when it sends you, the alert, it says dollar yen, it'll say RSI reversal on it. That's the 4 hour version. Euro yen, as you can see, it actually, chalk it up to luck on here. It was buying the bars before the weekend. Look at that. It's crazy. I mean, again, pure gambling at that point, because you're not realistically going to actually, go balls to the wall long before the French election. But Horace asking, how do I get added to those alerts? Yes, so we have a number of people on them. Send an email to info@SB Trade Desk, and you can say, how do I get added to the RSI alerts, right? And what I do is I'll, during the updates, I'll indicate when I'm turning on certain alerts, right? So, for example, dollar yen. The 4-hour alert has been turned on. Okay. And please, if you want to, get the alerts and take part of them, please go back and read. I showed you earlier in the webinar where to find the automated alerts webinar, but please check that out. There's a lot of information in it. All right, so there are the alerts for that. The point of these alerts is when you go into a strong trending move, it's tough to get involved in the trend, right? Because you wait for the pullback that never comes. So that's why we have these. All right, what about, I didn't go over dollar CAD. Pretty much just, what was written last night. The big setup would have been if you would have gotten a really big move on the inventories today, and you would have gotten a bigger drop. It would have been to buy it, to fade it. I mean, the idea to fade it, I guess, was there, but I've been looking for probably something more like 35. The low that you got just now was 35.42. So regardless, if we scroll back, the long-term stuff always tends to work the best, right? So we did think back months ago that this move, so in March, I thought this move was going to extend higher into a new high and be the trap. Instead, we went lower and then we went higher. And here we are breaking out. So 137 up to basically 138.38, which is the fib, right? So I think that you have upside in dollar CAD here. I did think it's interesting that the previous two legs within the bull from May 2016 lasted 61 bars and 62 bars, and both traveled about the same distance, 6.36% and 6.46%. Well, today is 61. Tomorrow would be 62. Friday would be 63. I'd be more likely to think that if you are going to get some sort of a high in this, then it's going to be on Friday, rather than say, tomorrow, just because it's typical to get a Friday high, not necessarily a Thursday high in a move. But the price level is 38.38 is the biggest one to watch, I think. And that's, again, it's the fib, and it would also be a possible channel slope, long-term slope, and all that good stuff. Okay. Near term on dollar CAD. Might be worth a long with a stop under today's low. That simple. You have the square root level, and it's come back to test it. You're pulling back. And if dollar CAD wants to go higher, probably wants to do it now. If it comes under today's low, I think you probably do come back to 35. So let's see if there's any volume levels on there. There is last hour, and on spot, on currency, that would be 35.92. So a new high volume level. Yeah, dollar yen in this, it's just like you don't want to try to fade this today, not during the US session. All right. Okay, so that was everything I had. We had a couple questions, and Horace, I think, Vladimir had questions. He said, please look at S&P and natural gas. Sure thing. So S&P, I've kind of been all along with the idea that we're going to make a May high. And it's going to be in the 24.80-90 range, right? This is an analog from 1987. I hope it doesn't work, because if it does, It's going to be complete chaos at some point. But the big risk is for the top to be in May, all right, at 2480, 2490. And 2480.90 is a measured level, okay, long-term measured level. It's all described on the long-term page, but what about the near-term picture, which is probably more what you're asking? Well, we actually just came into this push here, not quite to the highs, 2406, 2407 or so. Looks like where you would get some sort of a, what I would call a, a reaction, okay? And that is based on, remember basically the 2017 trend line and the channel. And just because you broke it down here doesn't mean that you want to get rid of it, okay? And there's a couple reasons for that. One, this was still really precise support, okay? And two, this was still, after it was broken, it was still resistance. We got it, the gap is what made us go through it, right, after the French election. So I'd still follow these two things. So near term, Vladimir and everybody else, this level up here, 2407 or so, so a slight new high, then watch out for, your pullback after the inevitable breakout and everyone gets really, really bullish again. Support wise, probably be looking at 2366 now, which, just a high within the range, but it would line up with the top side of what was a very nice trend line, right? Nice touches on all these levels, and also right where we gapped to. And it was even support after the gap, right? So you can see the trend line gapped higher, came back into it, continued higher. Here we go. So that's where I'd be looking. And you might get into this level tonight, actually, 2407, because with BOJ coming up and then ECB tomorrow, I'm expecting to see some exhaustion moves because we've gone very far in a short amount of time. And typically when you do get, these big events coming out, it's more of like a sell the news type of thing that happens after the market's gone very quickly in a short amount of time. It's not like the market's been quiet this week, right? It's been quiet in euro after the gap, but other markets have not necessarily been quiet. So, the S&P, for example, big stretch, big extension higher. So those are the levels I'd watch near term, Horace, or Vladimir, excuse me. Nat gas. Nat gas. I'm not sure I have anything really good to work with here. Like on the near term charts, like even a daily. On a weekly chart, this whole thing channels from 2005, which was the top. And so you have big lows on these levels, and the median line is where we've struggled, including early this year. right here, it's not much going on. Like it's not really one to make a call on. And that's okay. That's, there's times to make a call and times not to make a call. I think this is the time not to make a call at this point. I have nothing to work with right here. So I'm sorry, Vladimir, with nat gas, I just don't have a call. I mean, my very long-term thinking on this is that this is a channel that's complete and that we're going higher. Can we count a 5 waves up? 1, 2, 3, 4, 5, A, B, C flat. If that's the case, then you're really bullish against 252, right? And you'd be looking for, basically, bullish evidence. Let's see what we have on. Well, it is extended on the downside. So with all that said, if you can trade out of this channel, I think you probably have a bullish opportunity in net gas. All right, let's check out Euro Aussie. I think it's probably gone through the yearly opening at this point, has it not? Yeah, it has. So here's a reason why you don't necessarily want to, when you're trying to catch a turn like this, why you don't want to just put your order in. It's not like there's a trend that you're trying to latch onto at this point. So Euro Aussie, okay, we're through the yearly open. Your next level, first of all, this is still a big level for support, but the next level I've got is probably going to be that, what's that, the 25 line. So here's the fork, okay, median line, all that stuff. Much different chart, isn't it, than when we had on Friday after we left it. 25 line is about 147, which is basically the high from, what is that, December 30, or that spike high in December 30th. So here's the median line, here's the 25 line. Last big turn off of that was down here on 9/15, September 15th, 2016. That looks like the next spot. I mean, look, if you can make a reversal before then and get down below 45.38, which is the year open, do something bearish on the near-term chart, then I think it would be worth looking towards the median line, which is near 143 at this point, right? But in the interim, this is not something to fade right here. Not with it not doing anything right here, right? That's why we want to see the market, as I noted yesterday, we want to see the market turn down a little bit, do something impulsive on an intraday basis. And if Aussie's going to get down to 73.85, which it might, then you're probably going to get 147 on Euro Aussie. You know, 45.30 might be support. You know, I'll be looking to trade some Aussie myself over the next couple of days with us having support now, right? We're at that 50% level and the 74.91 resistance and then 73.85. So there's a couple levels to trade for that. So that's the deal, I think, with Euro Aussie, is that 147 looks like the next area to go to. Okay. All right. Wrapping it up here. You know what? Let's look at EuroCAD real quick. So EuroCAD is actually on this trend line. Pretty big market level for EuroCAD, is it not? And if I draw this out here, you got two equal legs. This is my thing with CAD, like right now. Like it's a breakout, dollar CAD that is. It's a breakout. You got the big level starting at 137, 138, 38's bigger. It's the fib. I don't know. It's such a chase up here though. Dollar CAD, isn't it? Crude oil is kind of trading around the 200-day average, which isn't the worst thing in the world, because every time it's done that over the last year plus, it's faked people out and then turned. And crude, getting a high volume day today, by the way, in Aussie. Look at that. Not in CAD. Okay, Matthew, let's see. Okay, Matthew's clarifying on the Aussie. All right. All right, let me pull up a chart with nothing on it so we can go over this together. So are you trying to label this as, this is the head? This is the daily chart. You're trying to say this is the head, shoulder, or no, sorry, shoulder, head, shoulder. Oh, yeah, that's not, that would not be a head and shoulders, as in you would need the shoulders to be much more in line. You could actually call this a double top though. So you could call this a double top, okay? With breaking, you could call this a double top, in which case your target would be 72.40. Okay, so this would be it's essentially the same thing, and you would trade it the same way too, because if you got 74.90 would be resistance, which is what we're looking at anyway, but I don't think it's going to get to 72.40. 73.85 is where I'd be looking. So this is a double top, but these are your two tops. Okay, first one was kind of a fake out, and then this is the second attempt on the downside, which is it's now breaking. Cool. All right. Okie dokie then, folks. We are wrapping it up here, and What's that? That's the crude chart. The 16, what is that? The 19th. So that's your key level for crude. New key level for crude. I'll have that updated later in the update. All right, I'm gonna get this archived and get it out to everybody so you can watch if you so please, or if you missed anything. Um, I think the biggest thing to watch, obviously, I mean, everyone's probably focused on ECB, BOJ, whatever. I think the big thing is those levels in the S&P and the Nikkei. I'm glad that Vladimir asked about them. The 2407 spot in the S&P 500, this is the SPX, the CFD version, looks like the really big area that could inspire, what I would call a pretty decent reaction on the downside. In which case, you're probably going to get failure in dollar yen, get a pullback to 110.56 or so. All right. All right. Have a great rest of your week, everybody. Thanks. Bye.